Hi, good morning. If you're joining us now for the Masterclass, What Open Banking Means for You, we'll give everybody a few minutes to just join up. I know that webinars don't necessarily attract the most punctual of audiences. I am Georgina Geddes. I'm the editor-in-chief of CFO South Africa. I'll introduce you to the rest of the panel when we're a little bit further in. You can see them up there on the screen right now. They're saying hello. If you're based in Johannesburg, it's a lovely warm day after some freezing weeks. So we're all feeling a little bit more cheerful about that. If you're in Cape Town, I think the next wave of cold might be slipping in, or you could be coming from anywhere in between. So, but I hope the winter's not treating you too badly, even though we are well into the third wave in South Africa.
Or you could be based in the UK in the middle of our summer and it's grey and rainy.
Yes, I know that when we were doing our preparation discussions, I tried to convince you that our weather wasn't great, Jason, but I know that didn't wash. Just a matter of housekeeping for the audience. In the chat, which is where we'll be hosting our Q&A later, you'll see at the bottom you have an option to address all panelists. If you could click on the little down arrow and change that setting to all panelists and attendees. In that way, it means that we can welcome you and everybody can interact with your chat, not just the panelists. That's how we like it in the community. I'm going to type a message in there. Good afternoon, everyone. And please introduce yourselves.
Hi, everybody. My name is Jason O'Shaughnessy. I represent Envestnet Yodlee. We've been operating in South Africa for the last 11 years. We're a provider of a data platform that enables consumers to access their data securely through third-party solutions.
All right, and I'll go next. Good afternoon, everybody. My name is Tawanda Chatikobo. You can call me TC, and I'm the head of digital strategy and innovation scouting over at Nedbank in the retail and business banking side of things. So we've been an extensive customer of Yodlee and Envestnet over the past few years, and really built a really strong partnership with the business around understanding customer data and then delivering value to our clients as a result of that data. And obviously our steps into open finance and open banking. So really good to see everybody online today. Should be a very good conversation. And to Gina and the team, thank you for having me today. Appreciate it.
Great, TC, thank you. And Jikku, over to you.
Good afternoon, everyone. My name is Jikku Joseph. I'm the managing director at 227. We've been using Yodlee from as far back as Yodlee has been around in South Africa for the last 11 years. 227 is a money management app. We help South Africans improve their relationship with their money by allowing them to see all their money in one place, get to know their money, and grow their money over time.
Great, thank you very much. I see that the room is filling up nicely. The room, what passes for a room these days. So it's great to have you all here. I'll just introduce myself again in case there are any latecomers. I'm Georgina Geddes, the editor-in-chief of CFO South Africa. We are here in a webinar brought to you in partnership with Envestnet Yodlee. And Jason's already given you an introduction. So let's kick off the webinar. The open banking revolution is coming to South Africa. Open banking regulation makes it easy for financial service companies to access the accounts of any customer who has given authorization. This makes it possible to develop products and services for customers, fintechs, and financial institutions. We've got a great panel of experts who can talk us through this pretty big change that's coming in the financial services space. It might seem like it's a behind the scenes sort of thing, but at the same time, it's actually got significant relevance for banks, for fintech companies, and for the consumer. So I'm really excited about unpacking the information behind this today. Jason, I'm going to jump to you first, please. First of all, I know you've given a little bit of an introduction, but if you could just delve in a little bit deeper and tell us what is a Yodlee.
Yeah, no, absolutely. So if you think about what Yodlee does today, is not too dissimilar to what we did back in 1999 when we first pioneered secure data access. We license our technology to third parties. Those third parties can be everything from large financial institutions across the stream, banks, insurance, credit card companies, right through to innovative fintechs. And they can range from Georgina's got a great idea, wants to create an app and do something cool, right through to someone like an Oracle, NetSuite, like a big fintech company. And what we're basically doing and have been doing for many years is making it easy for users of those services to connect their accounts in real time. So connect their bank account, their insurance and their investments accounts and so on and so forth. And that's being used across the world to do to power budgeting and financial apps. So you have a better view of the world of your finances, and they're updated on a regular basis. They might even be to assist with the affordability step. So connect your bank account as part of applying for a loan online. So rather than having to manually upload your statement, you'd connect your bank account. We securely send that data back. We'll enrich the data. So we'll categorize the transactions, all of that good stuff. And then even things like validating that you have a bank account before you transfer funds. So, and then I suppose just because I've been very focused on consumers, if you look at businesses, everything from accounting packages to small business lending. So there's a vast range of the different types of services that basically have had a demand for real-time access to data, ever since the day they started to launch.
Okay, fantastic. And then will you set the scene for us? Explain to us in a little bit more detail, what is open banking and why do we want it?
Yeah, so it's a really good question. And since open banking started in Europe with the PSD2 regulation, the Payment Services Directive regulation, it's kind of morphed and evolved into something bigger. So actually, in some parts of the world, they don't call it open banking anymore. They call it open finance because it is just about accessing your data, regardless of what it is. If you take Europe, where it kind of started with PSD2 and the UK was part of Europe when PSD2 was mandated, but when it was about open banking was specifically focused on payment accounts. So you think credit cards and bank accounts. All of the other account types, insurance, investments, pensions, mortgages and loans would be classified in Europe now as open finance. And there's a debate about when can we start having access to those account types? And the rest of the guys, TC and Jikku, can give you more information on that, on how they would benefit from it. Open banking today is really about banks being, in Europe, banks being mandated to make their data available via APIs to third parties. So it's basically enabling their customers to get access to their data through any kind of solution that they use. If you take somewhere like the US, it's not mandated by a regulator, but banks are now saying, look, we've got companies like Yodlee who've been accessing our data for many years via the direct access route. We want to now start to offer APIs because we've got volume on the platform. So they have a different view of the world and probably call it open finance more than open banking. Australia regulated it, so it's called open banking, but their version 1 of open banking will give you access to more account types than just payment accounts. So they'll start to bring in things like loans, investments, and mortgages, maybe super funds. So depending where you are in the world, the premise is around financial institutions making their data easily available and readily available via secure APIs for third parties, stroke their users. And then in other parts of the world, it may be limited to a set number of account types.
That's fantastic. Thank you. So Jikku, please could you give us a short introduction to 22/7 and explain where you play in the open finance space?
Sure thing, Georgina. So 22/7, like I alluded to at the beginning, is a money management app. Right? So we're helping South Africans improve their relationship with their money through allowing them to see their money, know their money, and grow their money. And when we talk about seeing their money, it's really about bringing all their accounts and all their transactions into a single platform. When we talk about knowing their money, it's about using leading categorization and leading personal finance tools to help them really understand what's going on with the money that they brought into the platform. So all this information that they brought into the platform. And then lastly, it's about helping them grow their money. And we do that through personalized motivation and encouragement that gets them to put more towards saving and investing or paying down their debt that helps them grow their net worth over time. And if you think about where 22/7 fits within the open finance, open banking ecosystem, we play a part on both sides, right? So on the one side, it's as a recipient of the data. So we collect customer consent in order to collect their data from all these different service providers. Today, there are over 120 institutions from which we allow you to collect the data. So we collect the consent to collect that data securely and offer the service, the money management service within 22/7. And over time, As those customers want to transport their data to third-party institutions, we will also be a provider of data once the customer gives us the consent to share that data with a third party to enable a specific value add or use case that that customer wants to have enabled at that third-party institution.
Okay, fantastic. And so all of this sounds very supportive of the free flow of information. So where does Yodlee play a role in that for you?
So specifically in the data collection space, Georgina, so as I mentioned at the start, right, we've been using Yodlee for the last 11 years. We collect data using Yodlee securely from around 120 different institutions locally in South Africa. So that's banks, investment providers, credit card companies, loans, rewards, across all different types of accounts. We're able to bring that information into 22/7 securely, and that's using the Yodlee service. Today, we have about 1.3 million accounts securely linked to 22/7, and the bulk of that data collection is happening via Yodlee's technology.
Okay, fantastic. And then in our prep calls, you were extremely knowledgeable about the current state of open banking and its implementation in South Africa. So could you give us a kind of quick timeline for where we are currently?
Yeah, sure. So we've been quite closely involved with the wave of regulatory change and engaging with the regulator and the industry as the third-party provider. So as this institution that's looking to be a recipient of data, but also in time a provider of data as well. As Jason was mentioning at the outset, South Africa typically follows legislation and industry dynamics that are happening across the pond, maybe in a slightly delayed fashion. So with PSD2 in Europe and the open banking order in the UK, that sort of started to create this demand for similar type of legislation, similar type of change in the ecosystem here within South Africa. And the Financial Services Conduct Authority and the South African Reserve Bank, through its National Payments System Department, both independently released papers last year, December, around this move towards open banking and open finance. And between December and February, the industry, including third-party providers like 22/7, were able to provide feedback to the FSCA in terms of the consultation papers that they had put forward. In May this year, we had feedback from the FSCA around the consolidated feedback that was received from the industry. The paper covered things like customer consent, data protection, the commercials around open finance, how we will secure the data, and how all this relates in relation to other parts of legislation. So the COFI bill with respect to the FSCA, the POPIA legislation that's about to go live or be enforced from the 1st of July. So all of that featured in the FSCA paper, and they provided that feedback in May. In terms of next steps, the next steps are 2 more workshops between the industry and the regulator, one in July and one in September. And the optimistic hope is that we will be able to get a paper published and finalized by the end of the year, and we will be implementing in 2022. Realistically, what will happen once the paper is published, Georgina, is you'll see a bit of a grace period offered to the financial institutions and third-party providers. So I think for all practical intents and purposes, we're probably looking at a 12 to 18-month timeline before you see regulatory-driven change. But as we well know, there are forward-thinking financial institutions today, one of whom is on the call, where they've embraced open finance and open banking and are participating voluntarily in the ecosystem.
Okay, great. Well, let's move across to one of those forward-thinking banks that we have in the room today. TC, can you explain to us your role at Nedbank? And given that open finance is on its way, tell us the bank's view on it.
Cool, thanks. That was a great segue, Jikku. Thank you for that. I really like that. It was very smooth. So personally, my role, as I said earlier on, is digital strategy and innovation scouting. So a lot of my work is around understanding what customers want, right? Not just digital customers, but your everyday Joe who may not be digitally inclined. And what do we do as an organization to make sure that we have amazing product and service that meets their needs across our platforms. So a lot of that is understanding innately what customer needs are, but most importantly, working very closely with technical teams to get stuff out and continuously improving on that. So a good way of describing that is in a non-technology sense, basically being the architect of what our digital strategy is. The innovation scouting piece is important because that's a lot of work that we do, for example, talking to partners like Yodlee and talking to partners like 22/7 and figuring out what the fintech ecosystem and bank tech ecosystem looks like, and understanding what technologies we can consume, again, with the ultimate aim of delivering amazing products and services to our customers. Now, that takes me to the point on open banking and why this is such a fascinating field for us. Now, for folks from the call who may not be aware, Nedbank, being one of the big 5 banks in South Africa, has been actively involved in the open finance / open banking space since 2019, when we launched a continent-first open marketplace called Marketplace, API Marketplace. And in this, we have exposed a series of APIs directly from the bank to the public. There's also an open sandpit where anybody with the right credentials can get in that sandpit and see how they can then connect and consume our services. So for example, a personal loans API or a transactional account API. These services are out there available for the public to use. And that was a first mover piece of play from us around understanding where this open banking journey is going to take us, right? Understanding that when this work was done, this was based on hindsight and learnings from PSD2 and some of the experience that some of the European banks went through, but understanding that there was no regulatory framework in South Africa for us to play with, right? And there's no box, as it were. So we've kind of been making this up as we go through the process. And it's been great working with partners, again, like Yodlee and 22/7, because we're then able to shape what our ultimate destiny is going to be from an open finance perspective. Jikku mentioned something very important around the timelines for the first set of regulatory papers to come through. And it gives us a level of comfort knowing that as a business, we've been at this for 2 to 3 years before the regulatory environment is put in, because it allows us to influence what those regulations would be. So we're almost able to craft the playing field to our advantage and to make sure that, most importantly, that open finance in its true form is actually taken to market, is supported by the right regulatory framework, but then most importantly, gives our clients and our customers the benefit that they want.
Sure, that sounds like an elevator pitch you've done before.
That was on the fly.
Well done. So Jikku mentioned something, which is that as 22/7, there will be both consumers of and producers of this data. So it's not just the fintechs that are going to be taking from the bank. It's going to work both ways. And I think that as a big bank, you're going to be doing a similar thing. So can you explain to us about the flow of data?
Yeah. So as it currently stands, we mostly send out data. So we don't consume data, as it were, right? Understanding that we are at the nascent stages of our open finance journey. So we provide information to the likes of Jikku and his team at 22/7 via an intermediary and third party like Yodlee. And in that way, we're able to make sure that our Nedbank customers have access to their accounts across a host of different platforms. There absolutely is scope to then say, in the future, what does our future state look like from an open banking perspective, not just as a provider of data, but also consuming data from other entities as well. So one of the things that we're doing is establishing or strengthening, as it were, our personal financial management journey, right? And taking a host of tools out to market. We just recently went into beta with a tool we call Money Tracker, which at its basics allows you just to understand how you're performing financially on your own account. There's absolutely no reason in my mind why that journey from a customer perspective wouldn't be expanded over time for me as a customer to get access to my Woolies account, for argument's sake, or to my Discovery rewards, and have this in one interface, as it were. So as it currently stands, if I was looking at ratios here, we're about 90% sending out data, 10% receiving. Over time, as our strategy starts to crystallize around personal financial management and the rest of our open banking play, I'm expecting those numbers to even out where we'll give and receive data in equal amounts.
Okay, fantastic. And Jikku spoke about the grace period for financial institutions to get up to speed, but it sounds like you've already, with this first mover advantage, you seem to have kind of built quite a few rails already. Are there things that you still have to do to get ready for when it comes into full effect, or are you pretty much there?
So I think we've made good progress, right? But I think we won't be fully ready until we actually see what the regulation is going to be, isn't it? Even though we are influencing it quite substantially, but only once we have that final working paper documented and promulgated, as it were, then we'll know. But until then, it's full steam ahead in terms of not just rolling out an open banking play, but also building relationships with the partners out there that allow us to expand what our offers are. So again, working closely with Yodlee, 22/7, and other partners who I'm not going to mention on the call, simply to make sure that as Nedbank clients, they have the ability to get a full service from a product perspective and from an account perspective and from a data perspective across platforms, irrespective of where they are.
Okay, fantastic. So Jason, over to you. And it's an interesting thing that, especially in South Africa, but I imagine elsewhere in the world, that consumers have to wrap their heads around this idea that this open sharing of your financial information is a positive thing. What is the mind shift that the consumer actually has to embrace or go through to prepare themselves for this open finance space?
It's an interesting question, because where you've seen open banking successfully being rolled out, most consumers who consume services where they're asked to connect their accounts probably are completely unaware that one is open banking and one is a different way of connecting your data, because they're not tech savvy. It's all they want to know is they can get access to their data via these services, and will it change any behaviors in the way that they interact with their money, or will they have something completed quickly? So, for example, applying for a loan, if that happens in 30 seconds rather than you spending 2 hours to get a decision. So the process of going through and connecting data, whether it's you've got a direct API through something like open banking, or whether you've got the more established technology that Yodlee's used over the years, which is secure direct access, where we take your credentials, log into your site in the background and bring the data back, which we do securely. From a consumer perspective, from all the data that we see across our platform, it doesn't really make a difference on the impact and take up. What open banking does in any of the marketplaces where we operate in, one of the positive things about open banking is it kind of draws a line under that, who owns the data. So, for many times, large financial institutions will often say, historically, right, this is my data, I own the data, so on and so forth. And there's reasons for that, because they're the custodian of your money, they secure your data, they do all the right things. And the last thing they want is anyone else to get access and do bad things with your data. It's their responsibility. But I think when you start to implement open banking stroke open finance, it changes the dynamics. All of a sudden, we're saying, actually, this data belongs to you, consumer. You have a right to it. You can do things with it. But then there's still a responsibility on the banks to say, but please, can you be careful, mindful, all those things. So I feel sorry for banks, because it's like a double-edged sword. They want to open up their data securely and give more access to their customers and enable their customers to do more things with their data to improve their financial lives. But on the flip side, they want to make sure that they're still doing the right things with their data, because, users will, phishing attacks and things like that, they're successful for a reason. The weakest point of any kind of security is the end user. So, but the key thing about open banking is it does it in a way that gives you direct access to your bank. Your bank offers you a service. And if you actually look at where the change has happened, if you go back 6 or 7 years, if I take the UK marketplace, banks would open up, make sure they had ATMs or branches near universities. So students would open up accounts with those banks. They'd get them at a very young age. And then from there onwards, they would hopefully have an account for the next, 10, 20, 30, 40 years. Now, I think if you're unable to connect your account to share funds when you're splitting tips, for example, or being able to apply for something, and it's not easy to get access to your data, i.e. connect to your account, then I think people will start to look at other banks or other institutions that don't open up and make their data easily accessible, because you want to download an app that makes life a lot easier for you. And if I can't connect my account, then why have I got my bank account? So we're starting to see that usability and users' view of their data change.
Okay, that's so interesting. And I suppose it is one of those things that you don't think about it when it works, but when it doesn't work, it frustrates the heck out of you. Jikku, I think that in our prep call, you shared that there have been some examples of South Africans already embracing exactly this and demanding exactly this. So could you kind of tell us, as someone providing these sorts of services, what you're seeing out there among the market?
Absolutely, Georgie. I think it's a very good platform laid by Jason in terms of what he's seeing in the market. What we're seeing is the use of social media as a platform to amplify that voice. We have a lot of customers who, when they can't share their data from their financial institution into 24/7, reach out to social media platforms and say, hey, I can't access provider X's data in 24/7. Why not? And the first question comes to 24/7, very shortly followed by a question to the service provider themselves. And oftentimes, if it's the service provider not able to share the data or the service provider's site is down, whatever it may be, it's frustration that's expressed by the customer. And 24/7 is now at that level of size where even the financial services providers are actually coming to 24/7 themselves directly beforehand and saying, hey, we're about to make a change to this particular part of the website or this particular API for which which we're using to share data. How can we work with you to ensure that there's no obstruction to your ability to collect data so that customers can make use of your services? I think the important thing to note here is that we're already seeing that in South Africa in the absence of regulation. And so over time, if this becomes the norm across different service providers and your service provider is not one of the service providers participating in the open finance ecosystem, that together with the ability to use social media to amplify your voice means that as financial institutions, the playing field or the dynamics of the playing field change completely, and our ability to respond to them also has to change, right? Our speed at which we're able to share that data and make that data available has to change. Otherwise, we are at risk of reputational damage.
Okay. So TC, can you tell me a bit about how banks operate in this space? What do you see as the benefits coming our way because of open finance?
Yeah, so I want to just double click on something Jikku said, right? And then I think that's such an important point. I want to shine a light on that, which is what open banking / open finance has done has changed the dynamic between the customer and the provider. In this case, the big bank, right? So to the initial point made by Jason, usually it was the bank has your data, the bank has your information, and as a customer, you come to us cap in hand to get something that actually belongs to you. That dynamic is now changing, right? To the level where we're seeing financial services as we know it's not just in South Africa, but globally becoming commoditized, right? So the client just wants this data point, irrespective of who provides it, when and how. I just need this information so I can do this behavior as a result, right? To inform an action. So the benefits that we see here, to my mind, are tilted towards the consumer, who ultimately should be the benefit from this, right? Which is, I am now in charge of my data. I now know how my data flows, but most importantly, I get my data when I need it, right? I'm sure there's every single person on the call here, if you're in the South African context, who's gone through the pain and admin of 3 months bank statements to do anything, all right? Which is, which is a legendary pain point when it comes to banking experience in South Africa, right? Open finance, open banking allows you to solve that, because now, for example, instead of you having to schlep to your local bank branch, or you having to print something out, finding a print shop to print, or going to an ATM, you can literally pull that information and provide it directly to the third party who's requiring it, and that strengthens your experience, because ultimately it is your data and your transactional information that you are sharing. So to me, that's the big benefit from a customer perspective. But then you ask the question, okay, Grace, what's in it for the banks? Very simple. Enhancing that same customer experience, right? So if I can take an open banking framework and package it in such a way, either on my digital platform, whether it's an app or whether it's a really strong online banking portal, to then say, I'm able to bring you this service at a low cost or zero cost to you that allows you to do so many things that previously you had to take time out of your day to do. That then enhances your experience, right? So to my mind, there's a win-win both for the big bad bank, as it were, and then also for our clients at the end, who now just has a simpler and better life, and they actually spend less time banking and more time with lifestyle.
Yeah,
go ahead, Jason.
I was just going to tag on the end of what TC is saying, is that whichever market we operate in, and we operate globally, wherever we see a financial institution that's taken the early lead of opening up and providing their data and making it easy accessible, they've got over that mindset. So historically, financial institutions may go, I'm opening up my data. That means other people can sell. If they can easily access my customers' data, they can sell them products. My customer might go away, so on and so forth. We've actually seen the reverse. Actually, we've actually seen customers become more loyal. And then not just customers, but small business customers become even more loyal because they want them to power their accounting packages or wherever it may be. But more importantly, because banking with my bank now is so much easier. Things are, I've got access to data. I can do things much more simpler. That's what I want from my bank. You know, I want to be able to interact in a much more seamless, easy way. And we always see the fact that actually it's a positive thing and not a negative thing.
Mm.
Jikku, do you have anything to add there to the benefit story? Just how broadly this is going to influence the market?
No, I mean, I think I would be repeating exactly what has been said. I think the best organizations are organizations that are seeing that it's in, you know, as an FI, as a financial institution, it's in my best interest to enable my customers to live their lives as best as possible. And I'm an enabler to enable that higher quality of life. And if I am able to enable that, there is very, very little reason for them to leave me, because they are serving me in my core need, and they're also serving me in those ancillary needs. You know, if I want to apply for a cell phone contract and I no longer have to print 3 months bank statements and have them stamped at my bank branch, but I can do it automatically, it reflects well on the bank. It reflects well on the financial institution. It's not just about the incredible experience that you've had at the network operator when you're applying for your contract. And there are many other experiences that a financial institution can enable that will make sure that it retains its customers. You know, it's about focusing on your core business and enabling your customers to have incredible life experiences outside of your core business by giving them the ability to transport their data safely and securely.
And it is fascinating that we're all cringing with acknowledgement as we hear about those 3 months bank statements. It's something that we all know and hate that process. And I can remember the first time applying for something through my own bank rather than through a different financial services provider. And they said to me, oh, no, don't worry, we'll just pull those. And that sense of absolute relief and freedom I immediately felt. If this entire webinar is about nothing other than not having to produce 3 months bank statements, you've got my money. So Jason, I know that you know, we're talking about the future and things that'll be enabled by open banking in South Africa, but you have had a solution to address some of these hurdles that you provided for 22/7 already anyway, and other customers in South Africa. So can you tell us a bit about what you think will change from what you're able to offer, given the new regulations?
Yeah, it's an interesting point, because if you look at the service that we provide, the access to accounts and financial institutions that we provide, that in theory doesn't change, you know, because we've got that already and we do it via our secure data access way of pulling in the data. However, the great thing about having direct feeds, API connections, open banking, open finance, whichever way we describe it, is it provides different things which are surmountable when it comes on resolving issues. So for example, connecting your account should be much faster because you've got a direct connection rather than you having to go through a circuitous route to log in the background and access your data. Reliability. So those connection reliabilities should be much more reliable. We're not going to have issues when a financial institution changes their website for online banking, and it means we've then got to fix and repair things on the back end, which we do, and we have a team of people that support that. But when you have APIs and direct connections through open banking and open finance, it removes that pain. So you've got reliability is much higher. You've got less errors when connecting your accounts because a website's not going to be down or bad internet connection. You've got this direct API connection. So the experience should be far more better when connecting your accounts via that whole open banking, open finance relationship. Plus also, it brings organizations like us closer and stronger to those financial institutions, because now rather than providing a service where we're going in and, you know, we're interacting with the hard work that these financial institutions have done in the past. They've built their online accounts for their users to access, and we're enabling that access for users. When you start to get open APIs and direct feeds, then we're contracting typically with banks to get those feeds. We've got to adhere to certain standards, and with regards to consented access to data via the users, how that data is then shared to third parties, but then also how we secure that data. So the actual ecosystem is much better than the way that we probably currently do it today. And that's obviously, we've been lobbying this since the first day that we launched our platform back in 1999. And over the years, we've been successful in getting direct feeds, but open banking has really accelerated the mindset globally, not just in a few set countries. Because we always find that in some countries, the take-up is really strong, and people and organizations, stroke banks and credit card companies, insurance, they think that way. But in others, it's a lot slower. So, and typically you find that where there are less banks, or a fewer banks to make up the majority of the market share. That's changed now with open banking. So better experience, less errors when connecting your data, more reliability. That's hopefully what we'll get out of it.
Okay, fantastic. And you've led me into something that I think is at the top of everybody's minds in a situation like this, which is the security question. Because we, especially the banks, are very good at drumming it into us how important it is to keep our data safe and to keep our information safe and to not share it with anyone. So I'd actually like to hear from each of you of your and I see that people are chiming in the chat as well, how the security paradigm operates in this ecosystem. So let's start with you, Jikku. You've been quiet for a bit.
Sure.
You're very good at the mute thing. I haven't had to remind you once.
Protocol observed. So we have been collecting data using Yodlee securely for the last 11 years, right? In the way that the data is collected today, yes, it's using scraping, which is the alternative to APIs, but it has been done securely in the last 11 years. For Jason, I'm not going to rehash what Jason has said, but for the reasons that he has described, it is certainly preferred to move towards APIs. In fact, in the FSCA's recent papers and response to the feedback from the industry, they were very clearly saying that both screen scraping and APIs will be allowed in an open finance environment. So the way that we're using to collect the data today will still be possible, will still be usable in an open finance environment, although APIs will be preferred for the reasons that Jason has just mentioned, right? What will be most important for the customer, for the end customer, is the awareness that has been created as a result of moving towards a regulated environment. Once you have a regulated environment, the end customer is aware of the fact that they can share their data, that there is a regulator involved throughout the end-to-end journey in making sure that the participants in an open finance ecosystem are following the right steps and processes to ensure that the data is secure. So although someone like 22/7 and someone like Yodlee, we've been doing this for many, many years, what will really help is that additional stamp of approval from the regulator, which says, hey, these guys are actually the good guys. Even though we have been doing this directly for very many years, it will certainly help to have that affirmation and to have that awareness created in the market that this is happening more and more often. It's not just, I want to share my data with 22/7 for the purposes of being able to understand and grow my money, but I'm also sharing my data with an embassy for the purposes of applying for a visa, with my investment company for the purposes of being able to top up my investment immediately, and with my network operator for the purposes of applying for a contract without having to submit 3 months bank statements, right? So the more commonplace it becomes, the more people become aware of it, the more safe they feel in terms of being able to do so, and the more adoption we have in terms of the open finance ecosystem, which is good for the institutions and good for the country as a whole.
I spoke too soon. There was a helicopter. I went on mute and now look. Tawanda, over to you.
Yeah, so similar views to Jikku there. From our perspective, we are strongly encouraging our clients to always be mindful of their own data security and their own cybersecurity, right? Because ultimately, you can do everything but, right? Ultimately, it comes down to the one individual who gets spoofed by an email and shares their credentials, and the password is the same across their email, the internet banking, and their mobile phone account. So we always want to put the responsibility not just on our shoulders, but our clients also. So you have to be very, 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 very secure with your own data and your own personal information. However, from our perspective, we also strongly encourage our clients to not to sign up for third-party screen scrapers that aren't verified or that aren't vetted, as it were, right? So, for example, a fraud vector that we've seen quite predominant, especially over the past few months, is spoof sites, right? So you get on there and it says payeasy.co.za. Apologies to anybody that actually is from an organization called payeasy.co.za. I'm using it as an example, and they ask you to enter your bank credentials, and you think this is a secure site, and off you go. Meanwhile, you've just been spoofed, right? So we encourage our clients only to use recognized sites, and why this open banking move becomes key important in driving that security paradigm is with a direct service, for example, via our API services, right? Screen scraping and spoofing comes that much harder because it's a direct data link, right? So we see it as a security enhancement over the previous paradigm that we've been in, which is not to say that screen scraping hasn't been secure. It actually has, right? We've had very, very few any sort of incidents where a client has been impacted, but there is more confidence and there's just better security that we believe with that direct link, which comes via API. And to Jikku's point, that's where the evolution of open banking goes. And we're doing some pretty substantial work with the team at Yodlee around building that reality for our clients as Nedbank.
Okay, great. So Jason, you kind of led us into this question, but is there anything else that you'd like to add at this stage?
Yeah, I think the thing I missed out, I mean, following on what both Jikku and TC have said, is that as a third-party provider in the middle of all of this, who is both enabling the collection of data, whether it's via screen scraping or via secure APIs, open finance stroke open banking, and then from the end user that's plugging into the third party provider that's enabling the users to go and connect those accounts via that mechanism, we have to make sure as a responsible third party that we are secure, because when we're handling credentials, and you could argue it feels like we're handling credentials in both cases. When you connect your account via open banking connections, you're still having to enter your credentials in an interface to connect your account. When it's screen scraping, you're entering your credentials and we're going off in the background and accessing your account. Although one is the direct APIs is absolutely the way to go. From a Yodlee perspective, we do all the right things. So, you know, we meet all the highest security standards. We're regulated just like a bank. We're PCI compliant. So we have to do all of these things. In our world, we don't hold any PII data. That data is not ours. That data is, in the case of Jason going to use Jikku's service, connecting his Nedbank account, the data belongs to Nedbank, the data belongs to the customer, and the data is shared and given rights to 24/7 to do things with their data, like offer them savings or new products. From a Yodlee perspective, we're just that process in the background that does stuff, you know, anonymously to make sure it works. It has to be secure. And to TC's point, we've been doing that securely for years. Data feed is absolutely the way forward. In the case of South Africa, we will continue to probably use screen scraping for a number of years while the banks and the credit card companies and everyone else starts to move over to direct feeds. Not everyone is as forward thinking as Nedbank. I was talking to a bank not too long ago. We said, look, we've got X hundreds of thousands of your customers connecting their accounts every day. Be great if we can get a data feed, just makes life a lot easier. And their response back was, why would we do that? And obviously, well, let's take these 300,000-400,000 users that we're screen scraping every day and let's give them a data feed and we'll have a stronger relationship. But they couldn't get their head around why they would want to do it. So there's a long way to go, but I think eventually South Africa is moving in that direction. It's much more advanced than many countries we've worked in both fintechs, entrepreneurial ideals for creating business. And so access to data in real time and electronically is really key.
Well, I'm convinced, but I'm not surprised that you're bumping into feedback like that one potential client.
I didn't say it was a bank in South Africa. I'll be very clear on that.
Okay. No, but I think that overall the concept is a little bit terrifying until you actually kind of walk through the process with someone who's been involved. TC, I'm going to ask you to put on your futurist hat now as someone who works in innovation. and give us a view of, so, you know, we all understand the short-term benefits that we're kind of working towards. What I'd like to know is do you kind of see a future where there are actually amazing futuristic innovations that we're going to see as a result of something like this?
Yeah. Apart from solving for the dreaded 3 months bank statements, there's a lot more to open finance, right? so when I look at my blue sky scenarios and planning here, we almost see a future where the bank almost disappears in the background, and literally all we do is provide we're a safe store of value. So we keep your stuff safe. In this case, it's data and actual rand or dollar value or whatever currency you want to use. And our job is then to make sure that it's securely shared with people you want us to share that information with. Okay, so I know, for example, just some conversations that I've had with colleagues in the industry where some banks are forward-looking enough to say, how do you treat personal and customer data as a currency, as it were? Okay. Now, if you think about your regular bank, we hold a phenomenal amount of customer information, right? Not just transactional information, but we actually have individual biometric and psychographic and demographic data that we store as well, right? How awesome would it be if we could be a central repository for that and share that on your behalf with whoever you want to as an individual? All right. So we're not just banking your money, we're banking your personal data and your information. So ultimately, that's where I see open finance going, right? It makes a transition past just sharing your transactional information and your account details with third parties, but actually banks becoming your central store of personal data and information. And because of that, we're then able to share that based on the client's permissions, as it were, with any third party, but done in a safe and secure way. So you're not just solving for your dreaded 90-day bank statements, your 3 months bank statements, but also I need a copy of my ID to go to XY provider. I don't have to schlep there with a piece of paper, photocopied and stamped by my local police officer. It can be sent directly from my bank to whoever needs it. So that's where I ultimately see open finance going, where you build a full open ecosystem supported by strong data, both transactional and personal, that we have within the bank, and that then links to the third party as well in a safe and secure manner.
TC, you've made me so happy. Is there a future in which I won't have to fill in forms and take photocopies of anything anywhere? Bring it
exactly.
on.
And I think Jason mentioned earlier on, or it might have been Jikku, apologies if I got that wrong. But so if you're using an app, for example, and you want to split the bill, right? And you want to be able to do something securely. We have that data, we have that information. Why now do you have to go through a manual process of doing that, right? And this is the benefit that open banking, open finance gives you, where you have removed all sorts of friction for a client. So you and I have gone out for dinner at the end of the night. You give me your bill, I scan it, and then immediately you're connected into my account. You get your share, and we move on. Done, right? I want to get a new cell phone. You got my statements, you got my data, you got my address, you got my proof of address, which is another pain point as well. All right there and then in one seamless transaction, and the product and service is done. That's where open finance takes us.
Well, let's hold thumbs. We get there quickly, because I'm liking this. I'm liking what this sounds like. Jason, you work in markets outside of South Africa, globally, and I think that you know, you're already seeing some of this in the UK and Europe, these changes that have taken place. So. Can you give us some kind of an introduction to what we might be able to expect that's actually happening in real terms in Europe and the UK?
Yeah, no, absolutely. I think the first takeaway is that clearly TC isn't going to pay for us if we go out for lunch with him. His mindset is to make sure we all split that bill.
He's got the bill.
I'm a banker, right?
Yeah, exactly.
And he has the technology.
So it's a good point. So I think what we're starting to see, so the whole discussion around embedded finance. So it's basically your finance is embedded in the solutions and the everyday things you do. So you kind of don't think about it anymore. It's just there. And I think where we're starting to see the market progress is, if you look at today, although it's starting to change. So I think yesterday and where we are today, apps and things that you download are fairly static. You've got to do something. So if it's a PFM app, you go in and, you know, all of the data is helping you understand if you've got money left at the end of the month, or so on and so forth. But where we see this becoming really successful and where the take-up becomes really strong, and I think we're going in that direction, is, well, what happens if, imagine, so basically the app and your data is working on your behalf all the time. So for example, if you imagine you've got an app, you've got your car insurance through the app, but when your car insurance is up for renewal in 2 months' time, the app notifies you it's up for renewal. It tells you what it is. In the background, it's already gone off and done some checks to see if you can get better quotes because it's got your information. You then say, well, actually, you know what? This other company is, £200 cheaper. I want that. You click that, and then everything's done in the background. So I haven't got to fill out forms or anything. It's just automatically done for you. So, and even this is probably a bit stretching this a bit too far, but imagine if your mortgage was moved every 2 or 3 months to the better rate with any institution, you didn't have to do anything about it. I think we're a long way off from that, but having your data do things for you in the background through apps without me having to do stuff, because while me as a consumer has to get involved and do things, it's always going to be slow take up. We're lazy by nature. A small percentage of us are on it. We want to manage our finances. We want to do the right things, but many of us are lazy. So typically you want something that's doing all of that in the background. And so, a good classic would be, I use my app, I manage my finances. I'll get an alert saying to me, actually, did you know that you've got 2 credit cards, your monthly bill across those 2 credit cards is £500. If you consolidated that in a loan today, you'd pay your debt off 12 months earlier. It would reduce your monthly payments to £400 a month. And you want that kind of insights, which then means the call to action is, yes, I want that. And it just happens in the background. It switches your accounts. It does everything for you. And I think that's where eventually we're going to start to go. The one good example of that, which is not to that extreme, but we power a number of roundup solutions around the world where, you connect your bank account or your credit card every day. We pull in your transactions. It rounds up your spend. So if you spend £2.50 in a coffee shop, it rounds your spend up to £3. It will take that 50p and it will put it into an investment vehicle. So as consumers, on average, when you look at the data, they're actually rounding up and investing anywhere between 25 and 45 bucks a month. Now, if you'd asked an individual, look, can you give me 45 bucks a month to invest in something, and you're 22 years old, the answer is going to probably be no. But in this way, you're kind of doing it without, because this is money you would probably just stick in a swear jar or in the side of your glove compartment in a car. And it's amazing to see the results. All the companies around the world that we power for those types of services, their take-ups are hundreds of thousands of users in a very short amount of time.
That all sounds very cool. I'd like to ask the audience if you have any questions for the panel. Please pop them in the chat. I think I saw someone raising their hand a bit earlier. I think Gloria. So if you'd like to put your question in the chat, then we can get to them now. I've seen a very interesting question from Martin Steenkamp, who said that many individuals are unbanked or underbanked, but there's rich data on mobile networks, and are other industries considering to participate? I'm interested. Actually, do you have any takers for that question across the 3 of you?
I can jump in. Jikku is probably also worthwhile jumping here. But around the world, when we look at open finance for us should include billers like telcos, utilities, gas, and healthcare as well. And so having access to specifically into certain markets, to Martin's point, if you look at Africa, you've probably got more money moving around and interaction via the mobile device. Especially where people are unbanked and they don't have bank accounts. And so their bank account is probably an e-wallet or a mobile wallet of some sort where they move money. Having access to those is very powerful. And we just see it as another data store. So we should absolutely be getting that kind of data.
And so from a mobile network operator perspective and from a regulatory perspective, there is nothing stopping an MNO from participating in an open finance ecosystem as what we would call a third-party provider. So as part, and we see this today, like we're already seeing this in South Africa, a lot of the network operators are diversifying their revenue pools outside of traditional mobile network operator revenue, so data and voice-based revenue, to actually financial services-based revenue. So they're looking to offer loan products that may be linked to the data or the airtime itself, where customers get small loans to be able to buy more airtime. And in order to do that, they need enriched data sets from which to underwrite those customers to make sure that those customers are actually credit worthy. So they are looking to participate in the ecosystem not just as a provider, but also as a recipient of the data. So there's nothing, and there's also nothing stopping them as per the movement in which the regulation is moving, the direction in which the regulation is moving, from participating as a TPP or even as an FI, provided that they're registered as an FSP in future.
And just to add to Jikku's point, I forgot to mention is Yodlee not only connects financial institution accounts like credit cards and everything, we also do billers. So for example, if a lender wants to have a look at my Vodacom statement for the last 30 days, for example, we can connect to that and pull that in. So it would give you at least a view that this person pays a bill and this is how much it costs every month, and do they default on that bill? So there are other ways of using that kind of data to make credit decisions.
Okay, fantastic. We haven't got any other questions come up in the chat, but I did have one more for you, Jikku. You mentioned that in this process, we're a good 18 months away from the reality of legislated open finance. So what is everybody doing in this time? What are the steps that everybody needs to be taking?
Yeah, so I think the organizations that will win in an open finance environment are the organizations that are already preparing for that environment today. And like the likes of TC and what Nedbank is doing in terms of not only developing the APIs, but also putting in the thinking time in terms of how will we not only use the data internally, but also data sources that we could acquire externally in order to improve our own customer experience, right? So the winners in the long run will be those winners who are already, those institutions that are already thinking about how do we share our data to enable experiences outside of the institution? How do we consume other bits of data from the outside to enable incredible experiences, more personalized products and services, better experience, better engagement with our customers internally, so that in the end we still stay relevant, we're still important in the industry, and we're seeing a lot of that. We're seeing a lot of that already happening. Maybe not to the extent that we would like to happen, but the benefit of the regulator putting out the paper and initiating that piece of action, which is this is going to happen. Is that more and more institutions are going to get on board before the regulation actually takes shape.
Fantastic, and I think that kind of echoes what you were saying, TC. Although you're a little bit ahead of the curve, and there are things yet to be seen about what it'll actually look like. Jason, have you seen an uptick? Are you taking lots of calls?
What, because of the discussions around open banking in South Africa?
Yep.
We're swamped. I just need a bounce. It's just crazy at the moment. But yeah, I tell you the one thing about what we are seeing is with open banking, open finance still doesn't have that awareness globally across South Africa yet. So there's still plenty of organizations, individuals that are unaware of it. And that's not surprising because it's, you have to be in the industry, I think, to understand what's going on and what may be coming. So that's fine. But what we do see is we see a lot of fintechs in South Africa that are desperate to connect to data to power a whole range of different things. And when you have the conversation with them that actually we're starting to look at connecting to some of the banks directly, it really does excite them. And that's really positive.
Okay, fantastic. We're almost at the top of the hour now. So I need to finish up. Thank you very much for the informative and fantastic discussion here today. I've learned a lot. I'm sold, and I'm looking forward to these future innovations. Thanks. Thanks TC, Jason, Jikku. You've been a great panel. It's been fun chatting to you today. Let me just go into our up and coming webinars. So this is the one we had today. No, okay, I'm doing it wrong. Hold on.
You want to call IT?
I always have to fiddle with these. Okay, so the next one we have is Amazon Web Services presenting the business case for cloud. Okay, here we go. There we go. Everything you need to know when considering an Amazon Web Services cloud migration, and that's on the 22nd of June. Next, we have the Finance Automation Promise Realized, brought to you by Case for Africa and Adapt IT, and that's on the 24th of June. And then on the 1st of July, we have Life After LIBOR, which was something new that I learned about. It's a banking reference rate that's also changing in South Africa. So that's another thing. And you can see that on the 1st of July as well. You can sign up for those at cfo.co.za /events. I've shared that in the chat. Just thanks once again to our fantastic panel today. And thank you to our audience. It's been great to have you here. Goodbye, everyone.
Thanks, everybody.
Thanks a lot.
Thank you.
Cheers.